So, what is monetary policy? Basically, monetary policy is the central bank that control the money supply through open market operation, such as buying and selling bond. Secondly, they are the one who adjust the interest rate. And lastly, they are the one who set the reserve requirement for every commercial bank. So, what is Islamic economics? Yeah?
Sorry, what is Islamic economics? Islamic economics basically they only use interest free in Islamic really instruments. Besides, central bank in Islamic economics maintain price stability, fulfill macroeconomic goals, control liquidity, and the last one is supervise banking operations. That's all.
Monetary policy. Islamic economic. When combined, you'll get Islamic monetary policy.
Sorry. So, what is monetary policy in Islamic economy? So basically, it helps realize the socio-economic goals that Islam emphasizes. So number one, it helps economic well-being with full employment, and also it helps the optimum rate of economic growth.
Number 2, socio-economic justice and equitable distribution of income and wealth.
And lastly, number 3, to ensure the stability in the value of money, to enable the medium of exchange to be a reliable unit of account, a just standard of deferred payment, and also to ensure the stability and to store the value of money.
So, the elements that are prohibited in Islamic economic are riba, gharar, maisir.
So what are the instruments of monetary policy in Islamic economy? Number 1. Managing monetary base, deposit mobilization, and fund utilization. The monetary base for the government must be based on interest-free transactions to help the government to achieve the aims of social welfare projects for the community.
Number 2. Public share of demand deposits.
A certain amount of commercial bank demand deposits should be given to the government because the commercial banks act as agents of the public to make sure the society idle resources keep generating output. Number 3. Interest-free statutory reserve requirement. This was used by central bank to control the liquidity management as it is accepted by the Sharia. Number 4. Credit ceilings. Credit ceiling is the highest amount that a lender will allow somebody to borrow to help the commercial bank to ensure that total credit ratio is consistent with monetary targets. And lastly, value-oriented allocation of credit. The funds that a bank credit from public has to be allocated for the social welfare.
One of the functions of a central bank is to control money supply through buying and selling bonds. For instance, this is Bakar Abu. He wanted to purchase a bond, so therefore he went to the central bank and met with the employee over there. They then agreed upon a price of the bond. When it is approved, the employee of the central bank will then distribute the bond to Bakar Abu. But this is the conventional way and it consists of riba. The next central bank's function is also to control the reserve requirement of commercial banks. The central bank also adjusts the interest rates. In contrast, in Islamic economy, we have the Islamic bond called sukuk, which is interest-free. So therefore, Bakar Abu went to the Islamic Central Bank and paid cash and purchased the sukuk. Bakar Abu paid extra. It is then rejected by the employee of the central bank. This is because the Islamic Central Bank does not accept any forms of interest. This is because it contradicts with the Sharia rulings. Bakar Abu then will need to sign the sukuk contract to purchase the Islamic bond. So that's how the Islamic Central Bank works in order to achieve al-falah.